Should the rally off the lows have been trusted, and where are we finding opportunity now? To discuss that, we're joined by Sarat Sethi. He's a managing partner and portfolio manager at DCLA, also a CNBC contributor. Sarat, as always, great to see you. The market went up for 2 months, better than, I guess, off the lows. It's been taking a little bit of a breather here. Is the breather signaling anything to you that could be longer term, or is it just a breather?
I think short term, it's a breather, Tyler. I think we've got a couple of things going on right now. One is we're in this quote quiet period. Earnings have all come out, so we don't really know what's going to happen for the next quarter. But most estimates are coming down, so I think you're seeing the market react to that. Secondly, Friday is a big day. Chairman Powell gets to speak and talk about where we're going to go with inflation and really what we're going to do with rates. So, as always, when we don't know what's going to go on, uncertainty is in front, the markets take a pause. And it's fine to take a pause because we had such a good run up. So the question will be really, what does the chairman say in terms of the trajectory of interest rates? And then secondly, as earnings come in, there's a group of bears out there saying that, hey, the PE on the S&P is too high and it needs to come down.
And you've got interest rates on the 10-year back above 3%. At least they were yesterday. I was texting with a friend who's an astute investor, and he said what people seem not to be talking about is the pace of quantitative tightening, or the money that the Fed is taking out of the economy. Is that contributing here?
I think that's a big part of it because we haven't seen that before. And really what happens there is you're going to see a huge amount of treasuries come on the market. That's going to cause the price to go down and rates to go up. So You're seeing that on the year. The interesting part there, Tyler, is to watch the inversion of the yield curve from 2 to 10. And if that starts flattening or starts moving upward, which it hasn't for a long time, but if it does, that is an indication to the market that things are actually going to be better ahead. So, just like when we had QE and we had issues as to kind of what is really going on in the bond market, now we're on the other side of it, and we're going to see really what is the true test of the market when rates actually start moving up.